What's up, guys? Welcome back. I want to show you guys. First, this is a recap of today's trading day, the first day of the month. I want to show you how I was trading on NQ, what my daily bias was, the trade that I lost, and the trade that I won. Okay. What do I want to accomplish as I'm giving you guys my daily recaps? I want to share with people that although the game of trading is easy, there's certain things you can do to simplify it for yourself. All right. First, you have to have a system that you go into each and every day, a way to get out of the market and get in the market. All right. Because you're not gonna win everything. This is a game of probabilities, but hopefully, over time, your profitability curve goes something like this. Okay, so we're gonna get into it. And first, what I want to do, I want to show you that at 9 a.m. this was my call out. I did have a bias, a bullish bias here, and we'll go back on the chart and look at that, why I had a bullish bias. Yesterday, what I did, I put it in replay mode, but I mean, it really doesn't matter. If you rather replay mode, let me know in the comments. But otherwise, I'll just do it as I see fit. All right, so going to the daily here. I'm going to show you what's going on with this. Alright, I'm going to show you just a higher time frame bias. I'm not going to go all the way up to the weekly, but the higher time frame bias. So this is the range we're in right now. Yesterday, the beginning of the week, Monday, we took out external lows. All right, external lows was taken out. So you want to always look for, when you're looking for a bias, you want to look for what is the draw, and those draws are based on the four things that market goes towards. All right, liquidity, of course. Maybe they'll move because of manipulation, or going back to rebalance or engineer liquidity. Okay, those four things. All right, so using that, you have entry models, and yes, I do trade smart money. You have entry models that you enter on the lower time frames that help you to your target. Okay, so you're not just saying, okay, I'm in discount, I'm gonna enter the trade. You want it to give you something. That way, when you have an entry model such as a fair value gap, an inverse fair value gap, a breaker, an order block, you have a place to put your stop losses that makes sense. Okay, because if you enter it off of these models, the probability that is going to go in your favor heightens, and because, say, you entered in the fair value gap, you expected to stay above the fair value gap because of the strength of the market, and if it goes against you, your stop loss makes sense being placed underneath the fair value gap. You know, something to that extent. All right, so let's get into it. On the higher time frame, we were going up. I mean, this is the daily, so we saw this one here, the second to last candle. But most importantly, we have this pin bar candle on the daily, just taking out external liquidity. So obviously, especially being that it closed above the new week opening gap yesterday, I'm expecting bullish. Okay, but you don't want to just strike right there. You need confirmations on the lower time frame, because although you may be able to see the destination, you don't know the price's trajectory on the way to that destination. Okay, it could try to go down a little bit, it could skyrocket up, it consolidate for days and then go there. You don't know. All right, and you don't want to wait around to find out. Just wait for confirmation. So let's go down. We'll go down a little bit to the 15-minute chart. Okay, so as you see here, before I get into my first trade for the day, right? All right, so when we mark off, this is the Asian range right here, right? High and low of Asian range. All right, and from the Asian range, we have this trend line. Okay, I call this, well, it is called low resistance liquidity run. All right, now when you, just like you have swing highs and swing lows, liquidity resting above those, you also have these trend lines. You could even draw a channel with, like, you know, an equivalent bar above here. You'll have built liquidity building underneath here. People have their stop losses here. I like to see that run, okay? And what I anticipated here, if we go to the 1 minute, go into the 1 minute, you see, I'm sorry, all right, we're right here. Okay, after this low resistance liquidity was ran, we have a V-shaped recovery. Okay, we have a V-shaped recovery, and close in we have a fair value gap right here in the middle that was inversed. Okay, I was in profit a little bit, but price it went back down and took me out. Okay, so that was the first loss of the day. And the model I used was the inverse fair value gap, based on liquidity being taken out. I was bullish. All right, liquidity was taken out right here from the low resistance liquidity, came down to the new week opening gap as the V-shaped recovery happened. Even though it was just before market open, sometimes if it looks good, I like to take a trade like that. I only entered one micro, not many, one micro, because my destination was 300 points away. So, no need to go crazy on it. All right. But I lost that trade. Well, that's fine. Now it proceeded to go further down and completely fill in the new week opening gap again, because this was already filled, but it came down to fill the new week opening gap. And, this is 740, and I like to wait until market open, and even not even right after market open, maybe like 10-15 minutes after, like 10:45, 9:45. And today we did have PMI, jolt jobs, and ISM PMI, and jolt jobs. So we did have some news today, unlike yesterday. But so if we come here, where's market open? Market open is right here. We have a little spike. It starts jumping up. I'm looking for a little more manipulation than that. Okay, so this served as a draw for manipulation. All right, creating a new daily low. All right, and then after we got that, now I want to show you this breaker that I have here. So let's rewind right here. Okay. Boom. All right, so we'll keep it there for now. All right. So we came all the way down here. All right, taking out a lot of liquidity on the way down, coming beneath the new week opening gap. Okay, and then we start to have some displacement. Okay. All right. And I call this a breaker because we have this candle here. We have a little shot up after this first after this first bearish candle, shot up, making it like a small order block, and then the order block is then violated, and then afterwards it creates a new high. Okay. And what the confluence that makes it even a better entry, and because I like it as a breaker, you also have a fair value gap overlapping this breaker. All right, so this is a breaker because the bullish order block was broken. Okay, and then it doesn't come down here making this a bearish order block. It continues to make a higher high. All right, so bullish order block broken, and then makes a higher high. That's the confirmation of this being breaker, it being a breaker. And then you have this 1 minute fair value gap because of this displacement here. All right, after all this liquidity was taken out, I look at that as manipulation. And as far as the AMD model is concerned, after manipulation you have distribution, guys. Okay, so now I enter this trade right away. Honestly, I do not wait for price to come back to the fair value gap, because a lot of times it does not. I like to build out my positions a lot of times, so I would enter a contract. Say if it was to come back into this, which I don't think it did, but if it was to come back, okay, it did, right? But I did not re-enter into here. But like a lot, if I was watching, which I wasn't at the time, I would have entered right here, but I did enter 2 more micros. All right, so let's let price run a little bit. So as you're seeing, and I'll pause it there. So now right here you have the change in state of delivery. So boom, the break is created along with the overlapping fair value gap. All right, price came back to the fair value gap. Even better entry than I did, but I entered here. After you have that, after I see the change in state of delivery, okay, price continues up, up, up. All right, right now that's 120 points. You know, I eventually entered a couple of more contracts, and my ultimate target. So when it comes to the AMD model, one of my targets are usually usually my ending destination target is the top of Asian range, okay? But honestly, I really wanted the midpoint of the consequential encroachment of this 4-hour fair value gap. Now that is a wide range, so and it ultimately did not make it all the way there, but as I got out at 633, and the reason I was aiming for 633 going to the hourly, I gotta get better at transitioning this. The reason I entered at 633, oh no, it was up here. Yeah, we have this line here. Alright, this one up here, which was close enough to the to consequential encroachment for me. Alright, and that that was it zoomed in all the way to the end of the day. But you get the point. One of the first targets could have been here at the top of Asian range, because look, you have accumulation, all right, manipulation, okay. It came past the new week opening gap into this 15-minute fair value gap, just beneath the Asian range, and then first target could be the top of Asian range, and my ultimate target was 19,633, which was this area right here. I felt that the next swing high was a little too far, and I wasn't sure if it was going to get here, but I am looking forward to get here tomorrow before a possible midweek reversal for tomorrow. So which is Wednesday. So yeah, that's the recap for today. Hopefully you guys got some knowledge out of that. If you have any questions, as in how do I draw my breaker, why do I like the breaker, my favorite entries, which is inverse fair value gaps, how do I look at the higher time frame, ask questions. That's the only way you're gonna learn. And thanks for tuning in, guys. Really appreciate you.